Imagine waking up to headlines screaming that Japan's stock market has just shattered records, all because of a bold new leader poised to shake up the country's politics. Sounds like the plot of an economic thriller, right? Well, that's exactly what's unfolding, and it's got everyone from investors to everyday folks buzzing with anticipation. But here's where it gets controversial. Could this pro-business powerhouse really be the game-changer Japan needs? Or is she setting the stage for even bigger economic headaches down the line? Let's dive into the details and unpack what's really happening, step by step, so even if you're new to the world of global finance, you'll feel right at home. Just 44 minutes ago, business reporter Osman Chia broke the news that Japanese stocks soared to an all-time high following the Liberal Democratic Party's LDP decision to appoint Sanae Takaichi as their new leader. This move puts her on track to become Japan's next prime minister, a role that could redefine the nation's economic landscape. For context, the LDP is the ruling party that's been steering Japan's ship for decades. And Takaichi's selection is no small feat. It's a nod to her reputation as a staunch advocate for business-friendly policies. The excitement was palpable in the markets. Tokyo's benchmark Nikkei 225 index, which tracks the performance of Japan's top 225 companies, jumped up by about 4.5% on Monday afternoon. For the first time ever, it reached the 47,000 mark, a milestone that symbolizes renewed investor confidence. Think of the Nikkei 225 like a report card for Japan's economy. When it climbs, it often means businesses are expected to thrive, and this surge was no exception. So, who is Sanae Takaichi? And why are markets cheering her on? She's no newcomer to the political scene, having held key government positions, such as Minister for Economic Security and Minister of Internal Affairs. Her platform is all about boosting the economy through increased government spending and keeping borrowing costs low. Ideas that could mean more money flowing into infrastructure projects or subsidies for businesses, potentially creating jobs and stimulating growth. To put it simply, lower borrowing costs are like getting a discount on loans. Companies can borrow money more cheaply, freeing up funds for expansion or innovation. Takaichi's economic philosophy draws heavy inspiration from the late UK Prime Minister Margaret Thatcher, the Iron Lady, known for her free market reforms that emphasise deregulation and entrepreneurship. In other words, Takaichi admires Thatcher's push for less government interference in business, which could translate to policies that let companies operate with more freedom, much like how Thatcher helped privatise industries in the UK to boost efficiency. Investors clearly loved the news, with shares in sectors like real estate, technology and heavy industry seeing significant gains. Imagine real estate firms benefiting from potential infrastructure booms, tech companies riding waves of innovation funding, or heavy industry players like automakers getting a leg up from cheaper borrowing. All of this paints a picture of an economy gearing up for a comeback. But, and this is the part most people miss, not everything was rosy in the market reaction. While stocks were partying, the Japanese yen took a hit, hitting a record low against the euro and dropping by 1.7% against the US dollar. For beginners, the yen's value matters because a weaker currency can make Japanese exports cheaper abroad, potentially helping companies sell more overseas. But it also drives up the cost of imports, like oil or food, which could squeeze household budgets. Japan economist Jesper Koll, speaking to the BBC, described Monday's market surge as a knee-jerk reaction to Takaichi's potential rise to Prime Minister. He pointed out that her plans for ramping up government spending to kickstart the economy might indeed give businesses a boost, but they could also pile on more debt, further weakening the yen. It's a classic trade-off: short-term gains for growth versus long-term risks of instability. And Koll's take highlights how her policies might not be a silver bullet. If Takaichi gets the green light later this month to succeed Shigeru Ishiba, she'll make history as Japan's first female prime minister. A groundbreaking moment for gender equality in politics. Her journey includes mentorship under the late Prime Minister Shinzo Abe, whose economic blueprint, dubbed Abenomics, focused on aggressive public spending and affordable borrowing to jolt Japan out of deflationary stagnation. Abenomics, for those unfamiliar, was like a triple-shot espresso for the economy. Quantitative easing, printing money to lower interest rates, fiscal stimulus, government spending, and structural reforms like encouraging women into the workforce. Takaichi has been a vocal champion of this vision, aiming to build on Abe's legacy. Of course, the road ahead isn't without its potholes. Takaichi will need to navigate the tricky waters of US-Japan relations, including finalizing a tariff deal hammered out under Ishiba's administration with US President Donald Trump's team, with Trump slated to visit Japan later this month. Koll suggests Takaichi will be itching to renegotiate terms that could strengthen the yen and stabilize the dollar, perhaps by securing better trade agreements that reduce tariffs on Japanese goods, making exports more competitive. On the domestic front, challenges abound. A sluggish economy, families struggling with rising living costs, and stagnant wage growth that leaves many feeling the pinch. Picture households grappling with higher prices for essentials like groceries or utilities, all while salaries barely keep pace. It's a recipe for public discontent that Takaichi will have to address head-on. Now, here's where the controversy really heats up. Is Takaichi's Thatcher-esque embrace of free markets and high spending the right antidote for Japan's woes? Or could it exacerbate issues like ballooning national debt, which is already one of the world's highest? Some might argue her approach mirrors successful reforms elsewhere, but critics could point to potential inflation or social inequality as unintended side effects. And this is the part that sparks debate. Will her policies empower businesses and lift the economy, or risk leaving everyday Japanese citizens behind in a wave of financial uncertainty? What do you think? Do you believe Sanae Takaichi's leadership could usher in a new era of prosperity for Japan? Or are there red flags in her economic playbook that worry you? Is the stock market's euphoria justified? Or is it just a fleeting high before reality sets in? Share your opinions in the comments below. We'd love to hear your take and spark some lively discussion.